I'm here to talk to you today about omnichannel risks, which contain many different types, fraud, abuse, returns, and more. And I'll go into detail about what all those are. So why is this such an issue? Well, really, online stores or omnichannel sort of came about where the online portion of a retailer's business was almost set up as a separate business in many cases. And so a lot of times the online side didn't talk to the brick and mortar side. And that's kind of gone on. And I think those walls are being knocked down, but that's how it started. It was sort of almost like a separate thing. And so the retailers are still navigating the operational issues with that kind of thing. Now, if you're an online retailer only, you still have your own sets of fraud and abuse, but you don't necessarily have that connection problem where the online and offline don't talk to each other well. The consumers somehow they learn these disconnects happen and they can take advantage of that. And then another thing that's happening is there's loss prevention groups, which sort of historically have lived within the brick and mortar world, trying to communicate with groups which may focus solely on e-commerce fraud. And so they may not be the same group, they may be the same group, kind of depends on the retailer. And so there's all these challenges sort of make this a harder problem to solve. So let me just walk through the different places where fraud can occur. So it starts at the beginning. So when the accounts are created online, you could literally have fake credentials, mailing to post office boxes. You could have people creating 10 different accounts to try to avoid detection. You can have bots, like literally programs creating these accounts, ID theft, all that stuff. And then once the account's created, now you get into, okay, I have the right to sort of buy something or have the shell set up to do what I want to do. And then they could use stolen credit cards. They could do any kind of fraud they want sort of from that point on. Okay, so once the order is placed, they could potentially even exploit the order change system. So if they figure out ways to manipulate that such that it's in their favor or that it creates an advantage to them, that can happen as well. In the shipment process, you get a whole nother set of fraud that can occur. Literally, the warehouse personnel can do things, the drivers can do things, we're kind of mainly focused on the consumer side. The consumers can do things too, right? They can say, I didn't get the package, or it came and it was damaged, or there was a missing component, or you name it, or it was the wrong one. Then the order gets received. They can make claims like the same claims. They can try to return that item. And then there's a whole bunch of other stuff that can go wrong there too, right? They could say, oh, I returned it, but it never got to you. Or they can return things that weren't the thing they got, right? They could take components out. There's all sorts of things in there. So all these steps sort of, you need to sort of break them down into their pieces and figure out what could go on there, and then how do we detect it? And that's sort of what I'm here to talk to you about today. So let me just go through some of the types of fraud, and I break it up into e-commerce and brick and mortar fraud. And then there's obviously a blend. So price arbitrage is one. And I'll just start with that. That's where I somehow buy something at a discount and I return it at full price. So the way this could happen is I go into a store or I go online and something's deeply discounted, I buy it. But then when I return it, either I don't show my receipt and I return it without a receipt, or I somehow am able to get the full price another way. Like I go and I buy a real one and I get the receipt and I then return the cheaper one on that receipt, or I return it twice on the same receipt, the next one I bought. I could literally return an empty box. That's an e-commerce one where I just ship you back the box with nothing in it, or I put something else in it. I can claim the product never arrived. I can claim it was damaged on receipt. I can claim it was super late in order to get a discount. And then I could just literally be what we call a wardrober, or sort of the buy, use, return. I could buy a TV, watch the Super Bowl on it and return that. Could buy a dress for a party, return it, or use it and return it. Really buy any item you want. I could stage an entire house for a open house, and return all that merchandise back. And then you have the resellers. So those are people who are not necessarily fraudulent, but they're using almost the retailer as their warehouse. So they can buy heavy amounts of items. Usually they try to buy them at heavy discounts, and they'll sell them other places. So, I've seen people do that for merchandise that's hard to get overseas. They may sell it on websites that focus on overseas buyers, maybe in different languages even. I've seen one for shoes in Russian, where people are buying from shoe retailers either online or in store at discount, and then they'll sell it in a place where it's harder to get those type of products. Um, they typically, the pattern they'll have is they buy a huge amount, lots of sizes, but then have a moderate return rate, so 20 to 50% return rate, where they just pretty much dump back on the retailer anything they can't sell. The next category is kind of in the same thing. Is really where they're buying in bulk, but then they literally ship it out of the country and sell it somehow there, and that's a more complex one, and it's probably going to be connected with the online side. They could buy online with a stolen credit card and just return it in the store without a receipt. That's a pretty common one. And if you have a bot that has a library of, say, 1 million stolen credit cards, they may just hit random websites, create accounts on automatically, just buy, have it. It could literally be set up to just buy merchandise. They could set up a pre-list and just buy, and then how many of those get through, they end up shipped to wherever. They could have a bank of addresses, and then they're just, bam, they're just enlisting hordes of people to return all that merchandise. They could steal the item or return it to the store without a receipt. That's a little more of a store thing. But theoretically, you could steal it off someone's porch, right? If the package was delivered, and then return it without a receipt back to the retailer. And then the multiple account thing is really just all the above can be done without detection if you have multiple accounts, right? It's harder to tie them together. So if somebody does one of these things once or twice, sometimes you can't detect them. When they do it 10 times, it starts to become more obvious. But if you split it out over multiple accounts, harder to detect. Now let's talk about some in-store fraud scams. Double dipping is a pretty common one. That's where I buy an item from the store, I go out to my car, put it in the car, and then I go back in the store and I pick that item up off the shelf and I return that item. That then basically gives me the one that's in my car for free. I could do random assortment of coupon fraud, where I'm overusing the coupon, or I get, say, like sometimes they have, if you buy a certain amount of merchandise, you get cash for that, almost like a certificate. Well, I could go buy something for $1,000, get one of these, maybe it's $100 or $50 certificate, which is basically like the retailer's name and cash after it or something like that. And then you just return that original $1,000 item. So then you just have $50 of free stuff. You can run point scams either on your credit card or on the retailer's loyalty if they're not good at deducting it when you return things, or you buy it, you go back and you return it. You don't give them any identifiers. You return it without a receipt, and then it can't get deducted back off. This would be, if you could do this on your credit card, you can build up points and then return those things. And if you can trick the retailer into crediting back to another credit card, you won't necessarily get it deducted from your credit card points. If you can, or if you give it back in like a store credit, or if you can literally get them to refund back to cash, that you'll be back in the same boat. So I think you can do the same kind of scams even with taxes too. So, right, if I'm a contractor and I want to rack up a lot of expenses, I may buy a lot of stuff right near the end of the year, put that on my books as an expense, and then later I'll return all that stuff kind of under the table, either without a receipt, so it doesn't go back onto the company's credit card, or we get it credited back into a different credit card, or et cetera. And so these are all things that really don't involve the retailer necessarily, but the retailer sort of being used as a proxy or as a somebody that's involved but not involved. Resellers, like I described online, can also exist in the store. They can wipe out entire discount shelves and just sell them online, et cetera. The whole wardrobing, renting thing, pretty common. Buy, use, return. That's a super common thing, and you can do it for TVs, apparel, home furnishings. You could stage out your house for a party. You could buy art. You name it. You could buy it. Just basically use it for a week or two and then return it back. As long as you're careful and it looks new, the retailer's most likely going to use it. Now, all these things generally, a lot of them involve returning back with a receipt. And so that gets into the whole process of what's called tender laundering. And most point of sale systems at some point will choke on this. A lot of retailers have it set up where it's hard to go around them, but then the scammers just go to the ones that don't have a good system. So here's how it works. So I buy something, I return it without a receipt, but I exchange, let's say I get a store credit at that time. So then I can take the store credit, buy something, but I'll buy more than the store credit requires. So like, let's say my store credit's for $25, I'll buy $50 worth of merchandise. And when I buy the 50, I'll pay the extra 25 either with cash or another credit card. And then I'll go return all that stuff back, right? So now I have a blended tender on the original purchase of some with store credit, some without. Now, if some retailers will pick up on that and try to refund you both ways, some are not very sophisticated and will just give you back to the credit card. Now you can repeat and rinse that whole thing over and over and over again, right? You could then get yet more store credits and try to do it again. And eventually you might be able to bypass the system and the retailer won't be able to track back anymore. Shoplisting is a pretty common one. That's basically me going and looking on the ground outside the retail or finding any other receipt that I can find. Generally cash ones are the best. Walk into the retailer, find the item, return that item, and get the cash back. It's basically like using the receipt you found as a shopping list. Stealing and returning, pretty common. Just you steal it, then later you return it like you bought it. And generally it's done without a receipt. Sometimes you can do it with a receipt you found, kind of in combination with a shoplifting approach. The converting counterfeit products to real products. Generally what that'll be is electronics are pretty common in that, maybe high-end apparel or high-end like purses. And you buy the fake one online, try to get a copy of it, and then you buy the real one in the store with the receipt, and then you essentially return the fake one with the real one's receipt. Sometimes you use the box that the real one came in even, and you put the fake one inside of it, and then you're basically getting the real one for the price of what you bought the fake one for online. Using fake receipts. So good forgers can make up a receipt. That's a little harder. Point of sale systems are a little smarter at that, but old point of sale systems or non-sophisticated point of sale systems are good at bypassing this kind of stuff. Employee fraud. Imagine any of the above scams where the employee is allowed to hit the button that says, I'm going to override, or I'm going to give it back to the tender you want. That kind of thing is very powerful. So all the above scams with the help of an employee can go up, multiple fold in terms of their severity. Price switching is a pretty basic one. I saw one at one of our home improvement retailers where people just repeatedly were switching the price tags on high-end plywood for low-end plywood. So they would buy the sheet of high-end plywood that maybe costs $30, $40 a sheet, 8x10 sheet, and they would then put the cheaper price tag on it though, and then they'd keep the original. And so when they return it back, they'd have the expensive one back on there. They just did that over and over and over again. And so they're making whatever arbitrage amount that is on every single return. All right, so let me just show you a couple examples, real world examples. I don't have a million here, but I just want to show you one or two, and kind of how we start to attack the problem. So here's one where you have the multiple identity situations. This is actually an individual. They had 20 different online or loyalty accounts. It's kind of a blend of both. But what our system did is kind of connect the dots, because what's hard to hide from is the paper trail of the money, right? So they were trying to use gift cards to hide, but they kept switching in between the accounts. And so we were able to kind of glue all this back together. They had a few random credit cards in there as well that allowed us to glue it together. And we finally glued it all together. It was about $8,500 in returns, about on $8,000 in purchases. And most of this is probably the double dipping scam where they're really not buying 8,000. They're almost there's an element to this where they're not the retailer doesn't really sell anything. They're just getting robbed. Here's another one. It's sort of on the online shipping side where they're people are just claiming over and over and over again that they either they didn't receive the product, or there was something missing, or it's the wrong item. And you just see over and over and over again in these in this history And this went on for, we have, 10 months of this. This is probably their COVID routine, right? They're ordering, they're saying I didn't get it, and then they get either a reshipment or a discount or a credit back to their credit card. And these are big numbers. So it was about $6,000 of this for 10-month window. And here's another one, a little shorter example, but I'm going to point this out because we don't want to just catch the big ones, right? We want to catch the little ones too. So here's one where I see 6 different claims on the wrong item, 3 additional claims where they didn't receive it, and it added up to about $600. It wasn't huge, but it is, when you add lots of these little ones up, they add up to big numbers. So how do we go about catching these individuals? So that's really where Appriss Retail comes in. That's where I come in. I'm a PhD in data science, so I'm sort of trained to look at the data and try to create algorithms and find anomalies. So what we do is we first have to connect the dots, and that's the key thing, right? So the fraudsters are going to try to evade you as best they can. They're going to use multiple credit cards. They're going to use store credits. They're going to use multiple accounts, lots of addresses, lots of email addresses. They're going to lots of computers. So all that stuff is sort of a mess, right? And if you're an investigator and you've ever looked into one of these, you can follow the chain and figure out where people have gone and done. But what our system does sort of automatically glue all that stuff back together. And then once you have it, then it's a matter of figuring out profiles for the individual and figuring out what their activity is and looking for the things that are related to fraud. Now, the data we might use to pull all this and glue all this together is going to come from the online channel and as well as the in-store channel. So from the online channel, we're looking at the user account data that they've set up. So it could be names and addresses, IP addresses, browsing histories, you name it. And then the actual orders, what they buy, what they return, then the changes they made, what actually got shipped to them, where did it get shipped, was the shipping address different than the billing address? Then we look at what they returned, where they returned it. Did it come back to the store? Did they put it in a locker and have it shipped back? And then any claims they may have filed along the way. I didn't get it, it was late, it was broken, etc. So all that comes into play. On the point of sale side, we're looking at the basic point of sale transaction information. We're looking at the header, the item, the tender, the discount tables, all those different pieces of a receipt that show you what they bought, who was the employee involved, how they paid for it, if they have loyalty information, what that was, et cetera, et cetera, et cetera. And then what we do is we distill all that down into hundreds of variables about that individual to figure out their behavior, right? We're trying to look for patterns of high return rate, lots of stores, high velocity of items, weird situations where the price differs between when they bought it and they returned it, et cetera, et cetera, et cetera. And that all can be synopsized into lots and lots of variables. And it feeds into our machine learning models, which spit out a consumer risk score, or in the case we market to the person, it might be a behavioral consumer score. And our machine learning models kick in then and really just flag bad stuff. And we try to rank things on sort of a 0 to 1,000 scale. That's kind of our MO. 1,000 being the riskiest, 0 being the least risky. And that way we can draw the line in the sand and say, okay, I want to cut everything off over 900 or 950 or 850, or everything over 950 gets automatically declined. Everything between 850 and 950 maybe kicks over for manual review by a loss prevention team or an online fraud team. So that way these scores can allow us to triage and manage. Now, what we're looking for is sort of a rare event, right? Online fraud, most consumers, they go on, they do nice things, they buy from you, they return when they need to, they don't make claims unless it's real. And so we're trying to identify the pockets where bad things happen. And so if bad guys sort of exist in a low rate in the general population, our machine learning models, when we say, okay, over 950, we'd like all of those to be the bad guys or high abusers even. And so when we make a decision to cut them off or to take a secondary action of some kind or to change their return policy or you name it, then we know we're getting a higher rate of the fraudsters in there. Now, the last piece to the puzzle is really this what concept we call dynamic learning. So I can set up an algorithm, right? And it may be working great today, but what happens is people figure out your algorithm. They figure out when they're getting caught and they work around it and they figure out a way to bypass it. And so if you have smart models, you keep a feedback loop, which then allows you to enhance the models over time and make it harder and harder for the bad guys to win. Basically, it's kind of an ongoing fight, and that's really where our system comes into play. And it's a very intelligent system that learns over time so that the fraudsters can't attack you. So that kind of describes, the basic problem, the data you need to solve it, and how we go about solving it at Appriss. Just a few closing thoughts on this. The online omnichannel fraud is a fairly new frontier, and I think there's many different teams within a retailer that aren't necessarily talking to one another well enough, and that's sort of an opportunity for the bad guys. You got to really attack this holistically. You can't look at it as I'm going to look at the brick and mortar data and then I'm going to look at the online data separately. You have to kind of look at them all together. And you got to automate here, right? Because the sophistication levels off the charts. There's automated bots hitting your websites. Everything you do has to be automated. The manual review of cases is kind of limited, right? You only can handle as many as you have people. But if you come up with a good automated system, it can scale to how many ever transactions or bad guys you see. And you have to have that last part, that you have to have a learning over time element to catch new types of fraud as they're invented. All right, well, that concludes my presentation, and I appreciate everyone's time. And hopefully you guys learned something. Thank you.